filed for insolvency or where proceedings are ongoing at NCLT. What's the total amount, sir, and what's the expected recovery?
See, NCLT, if you ask me, we have about 143 accounts which have been referred to NCLT, and we have a PCR of almost 100% against these accounts. So the amount-wise, it's not very large. I think about 16,000 crores. The biggest one being Shrey. So as such, I mean, these proceedings are going on. And since they are fully provided, whatever recoveries we get from these accounts, they'll directly go to profit.
Okay. Sir, let me just ask you a little more on the asset quality. The gross NPA ratio came down even quarter on quarter. There's quite a decline, 4.78 versus 5.63. Have you been undertaking any sale of bad loans to ARCs, and what's the plan with respect to lowering the GNPA levels from where they are right now? Mr. Prasad? I think we've just lost that line with UCO Bank. We're just looking at some of the internals out there in the numbers. Stock is down about 3.5%. Their GNPA levels have come back. Deposits are up about 11.3% year on year. Advances are up 27%. Deposit momentum, you can argue that quarter on quarter maybe is a little slower, just about 2.5% up. I think we have the gentleman back with us. Mr. Prasad, I was just trying to complete the picture on asset quality. What is your plan with respect to lowering GNPAs from where they are right now? They've fallen to 4.78%. How far lower can you take this number down to in FY24?
See, whatever the reduction in GNPA is there, it is primarily because of cash recovery, and to a certain extent, I think it is because of a certain amount we have written off. But there have been no sale to any asset reconstruction companies. So if you look at our gross NPA ratio, it was 7.89 at the same time last year. It has come down to 4.78. That is, it has come down by about 311 basis points. So going forward also, we are quite optimistic that this ratio can be brought down below 3% by the end of next year.
That's the end of FY24. By 31st March 24, you see the GNPA down to 3%. Right. Okay. Okay.
And sir, to bring it down to 3%, what is the expected recovery that you've penciled in FY24 or even on a quarterly basis?
See, if you look at our cash recovery for the year, I mean, it comes to almost 3,000 crores as far as this year is concerned. So going forward, there are several cases which are in NCLT and also in DRT where we are expecting good recoveries. So whatever reduction in gross NPA would be there going forward, that would be by way of recovery.
But any numbers, sir, on your expected recoveries? Will FY24 recoveries be more than FY23?
Yeah, see, we are looking at around 3,000 crores recovery in this year, 23-24. So that would help in bringing down the gross NPA below 3%.
Sir, you're confident of lowering your NPAs, but your provisions have been rising. Quarter on quarter, your provisions are up 85%. I don't know if that's because you're building buffers. Your credit cost has also gone up quite a bit. From 0.6% in Q3, it's gone to above 1% in Q4. Why is that, and what's the guidance?
See, the credit costs would have gone up in the fourth quarter because normally the fourth quarter is the time when most of the banks make provisions on accounts where we find a little bit of a stress. So naturally, the fourth quarter provision figures would be earlier quarters. But coming to slippages as such, last year the slippages were around 6,000 crores. And this year they have come down to 2,000 crores. So the slippages have come down nearly by 2/3 compared to last year. In fact, if you look at it, compared to last year, the provisions have also come down by 65%. So the slippages have come down, credit quality has improved, and we made a conscious decision to improve the provision coverage ratio while bringing down the gross NPA and the net NPA, with the result that our provision coverage ratio has gone up by 306 basis points from 91.44 to 94.50.
Sure.
So we are adequately provisioned. Yeah.
Got that.
Yes,
so you're
please.
building up provisions. Final question, Mr. Prasad,
Yes.
on business growth as well, because in the fourth quarter, advances saw a healthy 27% move year on year. What is your outlook on loan growth in the current year, FY24? And just leave us with a picture on the margins as well.
Yeah. See, last year we have seen a loan growth of almost 24.5% year on year, which is a very healthy growth. And the growth has come from both the corporate side as well as the retail side. So I think the way the loans have grown reflects the fact that the Indian economy is doing well, because the banking sector basically reflects what's happening in the economy. So going forward, we would expect the loan growth to pick up because things are getting better, and with the pause in rate hikes, the cost of funds would come down for the industry. But going forward, as what I see is that there would be a little bit of pressure on margins, because the cost of funds would go up because the deposits interest rates have gone up in the last 2 months. So the deposit cost would go up, and at the same time, since there has been a pause in the repo rate, the interest rates on loans would not go up. So taking into account both these factors, there would be a pressure on NIMs going forward. But I think as long as we show a healthy growth in the retail side, and reduce our growth a little bit on the corporate side, I think we should be able to take care of the margins.
Thank you very much, sir, for joining in. That's UCO Bank for you. Need to get into a break. We'll come back and talk technicals. Mitesh Thakkar joins in next.